The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've had some pretty good action in the stock market. As you heard from Tom's show that was recorded, he was expecting a big spike due to the effect of J.P. Morgan's earnings, which they came out very good, as they should be, because they have to pay that $19 billion in fines over these past few years. However, the real action started in Germany. If you'll notice, the first chart that I posted was the DAX on a short-term 5-minute chart. You'll notice that it gapped up about 60 points. That's the equivalent of about 100 Dow points. It continued up, and it went all the way up to the 78% retracement ABCD to the exact tick, which was 10,080, and never has not really exceeded that as of yet. So I don't know if that means anything or not, but the numbers are certainly spot on here. Oh, by the way, folks, I meant to mention I got a phone call yesterday from Bloomberg, and they have selected me to be on their show next week as the one of the timers of the year for the stock market. So I think I'll let you know exactly when that's. Hold on just a minute. I got a call coming in. Hello? Yes, this is Larry. Yes. Oh, okay, I understand. I can understand how that could happen. Okay, thank you very much. Well, excuse me, folks, that was Bloomberg calling in, and they had me mixed up with somebody else. So maybe next year we'll be on the show, so we'll see what happens. Should have Tom O'Brien on the show and also Basil, because they've nailed this thing pretty good. All right, let's get down to the nitty-gritty of what some of these markets are doing. I think there's a possibility, and I mean it's a what we would call a outlier event, but it's not very far away. So, and that's in the gold market, folks. Give me 1 second here, and we will put it up. There we go. This is what I want to see. Okay, given the fact that we're having tremendous volatility and everything today, I wanted to go through this with you here in the gold market. You'll notice that after we broke the 1340 level, we rallied up to the exact 382 level yesterday. That was being the 12th and 13th of July. That sets up a beautiful ABCD pattern coming in at $1,300 an ounce. That's a perfect 61% retracement that came in at the Brexit vote, if you'll see back there on the 24th. And it's a perfect ABCD. It's the second ABCD. We had one back on the 23rd that took 9 days to form. This one would have taken 9 days to form. So I think you have to be a buyer of the gold if it gets anywhere near 1,300 today. And we're not very far away. We're down about 20 bucks. So and silver is acting incredibly well, you know, given the fact what gold is doing. I mean, silver hasn't even taken out those lows from the 12th yet. So it's acting even better than the gold market. But I think that that's a, and not only that, but you would be down $75 from the high, which is 2 times the 34, around 70 bucks. So that would be 2 harmonic numbers down, you know, from that level. So I would certainly, you know, pay close attention to that. All right, now I wanted to talk a little bit about our good friend Jim Bartolioni. As you'll recall, last week, in fact, on Monday's show, we talked about the British pound and the potential for it to rally. And we've certainly had a pretty good rally on this. We talked about this yesterday in the room, as I recall, because I had quite a few people respond to me over the evening about being a buyer at that 382 retracement down there at the 130-150 level. As you see, we got down to 130, 110, and now what we've done, as I'm sure most of you know, that we have gone off the top of this chart and we hit 134.85. And that is an interesting number because it is the exact number, well, it's in the range of the exact number that Jim Bartolione told us about on the British pound. And as soon as I find that chart, I am going to bring it up and show it to you. I know I have it because I practiced on the radio show today. Oh, this is frustrating when this happens. Doggone it, Larry. I put them in order and then they disappear. They don't like me, these computers, but that's the way it goes. I'll find this thing in a puppy in a minute. We'll just, we'll get it back here. Where is it? Doggone it. Oh, frustrating as heck. Okay, let's move on to the next one. Anyway, the gold looks very, very interesting at that point. So I think that's a real interesting one to take your, pencil to, if you want to put it in order or call it in or tap on it, whatever you decide to do. Here we go. I found it. Just a second. It just takes me a sign. It's just big as life right in front of me. This is the long-term chart that we were looking at on Monday. And as you can see here, we had a breakdown below that 135 level. That took us down to the exact 786, which was 127 and change. And then we had a little bit of a rally, and then we had a pullback to the exact 618 at 128.60. And the market hit that first price objective last night at 134.85. The number was 135, so that's 15 pips. So that completes that swing. What you'd be watching for now is a retracement of this move, much like we just had overnight. And then you'll see another chance to buy it, but you can't buy it into this type of strength because it is moving 100 pips about every 20 or 30 minutes nowadays, so it gets a little crazy. So that's the main thing. The other one that's very interesting now that is starting to get the attention of some people is the Treasury bond market. We were talking about this also on Monday, making these big ABC patterns at the exact 1.618 level. And now we're down 4 handles, which is a little better than $4,000 in a contract for this. Where the next level of support, we're trading at 173 and change right now, and that's very small change. And we would expect to get it to 171, about another 2 points. The last major correction that we had in the Treasury bonds was 6 points, and this would be equal to that if we get down to 171. Anything below 171, and that is goodbye. I mean, that's pretty much what it is. By the way, on CNBC this morning, I happened to be up because I was up most of the night watching some of the action going on. But the main thing was that they had a former Fed chairman, not Fed chairman, one of the board of the governors on there. There was 12 Federal Reserve banks. Each one of those dudes is called a governor. I don't know why, but his name was Walsh. I think John Walsh, and he was on, and he was saying that the Fed has made a big mistake here in doing this, and he doesn't know when it's going to happen. But he said it just doesn't make any sense, and but that was his interpretation of it. So we'll see. We'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've posted the chart for the IBB, which is the biotech index. As you can see, this was the leader of the market for the first 6 years of the bull market between between 09 and 15, and now you see it's been decimated here. We're probably going to be higher today, given the fact that they're buying, pretty much everything in sight. So it's still in a downtrend. It had some bad news yesterday on several of the stocks that are involved in this, but any type of a strong move in this would probably look to be a sale because it is so much weaker than the rest of the market. The question is, we have broken above the coveted 2160 level. I mentioned yesterday that we looked at that the low in 1987 on October 20th following the crash was at 216 in the S&P, and we're going to hit that today. We're going to hit 2160 in the S&P because the futures have made 2168. So I don't think it's going to close above 2160 today. But, frankly, when you got trying to catch a falling knife is really different. I had 2 emails last night, folks, from different people. I swore they were friends or using the same computer because they both had the same question, is how can I be so right about so many things and be so wrong about the market? And frankly, it's probably because I rely on the astrology that has, led me to the promised land, so to speak. And I also, follow the patterns. But when these patterns fail, you just have to, try it and get out and wait for your next shot. That's basically it. I mean, soybeans and corn and wheat, treasury bonds, the British pound. This was a fabulous move for the people at Fibonacci 24/7 this week. We took better than 7.5 points out of the British pound just in 4 days. Which is pretty good, and 4 points in the bonds, which is pretty good, and in the oils, so it's been a good run. At wheat, we did, we took over 20 cents out of wheat. So these are just patterns, folks, and you can't be right all the time. So you've got to go in and just, basically pays your money and takes your choice, and sometimes you're going to win and sometimes you're going to lose. You don't know which ones are going to win. If I knew which ones were going to win, I would put more money on those and not do any of the losing trades. Now, that would be a pretty good idea, but that's never going to happen. The edge that we have are the patterns and the ratios, and that's all we have. I really don't follow the news. I happened to be up last night because of this British thing and having a position in the pound for the folks. I wanted to be able to, at least try to manage it somewhat, but it worked in our favor because they did not drop the rates, which they were expecting. And here again, I was just looking at the charts. Just like when the Brexit came, we were short the pound at the 150 level. And that turned out to be a really nice move also. But it's just probabilities. That's all it is. No more, no less. Now, I'm trying to have Bill Meridian from Vienna, Austria as our guest. He's the gentleman who was on about a month and a half ago saying that he was expecting a strong move into July. And I think by any stretch of the imagination, you have to call this a strong move into July. So we'll watch this as it unfolds. That's primarily what we're watching today. The stock market, folks, what they're showing you in the Dow Jones. I know this is a broken record for you folks, but it's worth repeating, and that is the real market is the New York Stock Exchange Index, and they are going to break this to the upside today. But Tom O'Brien, this was a recorded show from yesterday, talked about the price of 10,819 in the hold on one second, in the New York Stock Exchange Index. And we closed at 10,006 and change, and so it's going to be up about 100, I guess, today. And the 78% retracement on this number is at 10,748, but the 1.27 expansion number is 10,819. So watch that a little bit. But frankly, we're way past any timing things that we have. The Bradley model is at least CC5 to the 14th. It's 9 days past where it should have stopped. And if we gave it the benefit of the 11th and 12th, that's another 3 days. So I frankly don't have anything to get it to turn down here, very easily. And we'll see see whether that's going to see if that's going to happen or not. So we'll have to give it a little bit of time to see if it's going to work. Remember, we're trading below 173 now in the bonds, so 171 is the larger ABCD pattern that's there, and it will also be a move equal to the last correction that we had, which was six handles down from that would be from 177.12 to 171.12. So we're about a point away from that. So that's also an interesting one, because below 171, it's telling you that 1.618 on the daily that we looked at earlier, it really, really does mean something, and there's going to be a lot more to the downside. This will be an interesting day today, because I'm just curious as to how many things will be pulled up by the enthusiasm that we have going in the market. The Hang Seng Index that we looked at yesterday, that market has not broken above the ABCD pattern, even though it was a little bit higher today. Closed about 0.5% higher, up about 100 points, but it still has not broken above the key level there at 21.6. So that's another one that's holding in. Now, we've had a request to talk a little bit about cattle, and we will have Rich Anderson on tomorrow from Anderson Capital Management, and he'll be our guest, and we'll be looking at that very closely. Now, this is the chart from just a couple of days ago that we talked about with Rich, and that he was looking for the cattle to get down to this 108 level. We hit that spot on perfect, and we've now rallied 3 cents a pound already. So cattle possibly have made a pretty significant bottom there with the two ABCD patterns that we're looking at here. So those are just some of the things that we'll be talking to Rich about, along with the soybeans. The soybean November beans are now up a whole $1 from the from the bottom that we had at 10.20. We're now trading at above 11.20. And then also, wheat has moved up, 30 cents off the bottom. And corn has also moved up about 22 cents off the bottom. So a major bottom occurred there on these expansion numbers, and that's what we're looking at when we watch all of these things. So that's neither here nor there. Don't buy any stocks today, folks. Wait a day if you have to wait anything. When you get involved with this emotional stuff, that never works very well. And you're in a market that's up like 8 days in a row. It then hasn't closed 8 days higher, but it's made higher highs. And that's not the probabilities of that is, just doesn't work nearly as well. Just like if you were in the gold. I mean, look at gold. It was 1370. The whole world wanted it. Now it's 1321 and nobody wants to touch it. So 1300, I think I'll touch it, but not till then. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And I wanted to mention to you that we've just hit the 78% retracement in the Treasury bonds at the 172.18. We've had a $5,000 move over the last day in the bonds, up and down. So we're having some great volatility there, as you would expect. So keep in mind that that's why this is so very important. I would like to mention a book that is very, very important if you like Fibonacci numbers and the numbers of sacred geometry, and you want to see how it fits in with nature and things like that. The name of the book is The Dimensions of Paradise by John Michel. That's Michel. He was a London author, did quite a few books in this area. He passed away just a couple years ago, and now there's a group of people that are carrying the torch for him, and they have meetings all over Europe going over the things that he talked about. But in his book, The Dimensions of Paradise, he spent a great deal of time, talking about Pythagoras and how he dealt with music and things like that. And the key number that John Michel always mentioned was 216. That was the low in the S&P back in October 1987. And here we are at 2160, 10 times higher, 38 years later. So it's 28, is it 38? 28 years later, right? See, 87. Yeah, 28 years later. So that's where we are. But if you take, 216, you have always heard of this number of the beast. Well, if you multiply 6 times 6 times 6, that's 216. He related this to Pythagoras. Pythagoras talked about, said that man is 2 octaves below God, and that the first octave is 216 times 12. Which is part of the musical scale, and it's really amazing how they went to all these numbers. If you just take a look at the book, you'll see how all these numbers, fit together. But it's a real interesting that they do pop up all the time, and these are some of the things that we look at. All I do is I keep it as simple as possible, just trying to look at the major 4 Fibonacci ratios. Retracement 618, retracement 786, expansion 1.27, and expansion 1.618. Because once the market goes beyond 1.618, then that is the number that tells you that it can go far, far higher, as we've seen, many times in this market. So these are the things that we're, talking about and trying to get a handle on today. Someone's asked a question about where would we be a buyer of silver if gold gets to 1,300. There's a lot of different places that you could probably take a look at silver, because silver is acting incredibly strong, folks. I'm going to put the chart up for silver here so you can see what we're looking at, and you'll be able to see that we're trading in silver just a little bit below where I posted this last night. I think we're trading at 2015 or 2018 right now, and you can see that we're not even down to the 61% retracement from the July 8th low. You'll notice that ABCD pattern on the 8th that we had at this 1900 level. That took us up to the 786, and we've been there twice with lower tops. So the ABCD structure on this, if you were to get, and I don't know if silver can drop $1. I guess it could $1.50 from here without any trouble. But we're making an ABC pattern possibly in the gold at 1,300 that I posted this morning, and we're not even taking out the lows from the last few days in silver. So silver is acting, incredibly bullish right now. That could change in 10 minutes or 10 seconds, but right now that's what it looks like. So I would look at silver if gold gets to 1,300. I don't trade silver very often, and I trade gold. I would be a buyer of gold at 1,300. And I think it's got a chance to get there. And if we get above 1340 today or tomorrow in gold, then that 1300 target probably is not going to happen. But as we're speaking right now, the thing, it looks like it wants to go a great deal lower in gold, at least to the level of 1300. And that's what the number is that we're watching. We're trading at 1323 in change right now. So we'll see what's interesting. Now, we did hit the exact number in the Treasury bonds, and that was at 172.17. We've bounced a few pips off of that, but that could be a very important number today in the bonds, because that's the 786. Remember, the 61% retracement held it yesterday for 1.5 points. We made the exact low, at 173.18. The low was 173.14, and we rallied all the way up over $1,000, to 174.19, and that completes that ABC down here that we hit at the 786. But anything below the 172 level sets up what we think is going to be that much easier level to hit, which would be down into the level of the that would take us to, it would take us to a little below 171. So that's what we're watching right now. We've got silver trading at 2020. All we've done so far is to make a 78% retracement of yesterday's range. And, gold has just been hammered pretty badly. We're already at a 1.44 expansion of yesterday's range. So you can see the difference between gold and silver is really substantial. Folks, when I do all this stuff, this is all related to numbers and nothing to do with the news or fundamentals. I try to listen to as little news as I can, and that's the bottom line of what we're trying to do when we look at some of these things, because like anything else, no one knows what's going to happen, but what you'd like to see is to see something that could possibly happen, and we'll see. Now, we've got a potential, we looked at the British pound earlier this week. We've got another potential major pattern forming here within about 50 pips from where we are right now for you foreign exchange traders. I wanted to put up the Australian dollar to let you look at it. You'll notice here that we've had a very, very symmetrical chart here over the past. Well, it's always pretty much symmetrical, but you can see the cycles that are there, the patterns that are there. When we made the 3 drive to a top up at the April 19th level, then we broke down to the 61% retracement. And now what we're doing is we're making a really nice ABC D pattern with a 3 drive pattern at the 176.95 level, and that's not very far away from where we are right now. So that's the spot where I would be looking to be a seller of the Australian dollar and not risk more than about 60 pips would be the maximum risk that you would want to be looking at for this. And the currencies are by far one of the better things to trade, in my opinion. That's what it appears to me from looking at these things over and over again. That's the best way, to really look at them. So then that's just one of them. There's a couple of. The Canadian dollar is also making a beautiful long-term Gartley pattern, and if I could just find it, I will pull it up. And we'll see if we can find it, and then we'll put it up. But right now, I can't find it, so I'm not going to put it up. We'll not worry too much about it. Okay, I wanted to mention to you what happened this morning when we had this run up in the British pound. Hold on, I'll be right back. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've been asked to walk through this gold scenario that we've been talking about, the potential for 1,300. I've posted the chart from yesterday when we had come down and broken below the coveted 1340 level. We got down to 1328. Then we rallied up $17 to the 38% retracement. If you look to the far right, you'll see those little markings, and the first little green, light green mark you'll see is at the 38%. That came in at 1347.50. The high on gold yesterday was 1348. Then it started to go lower. Now we're $26 lower than that, and the price objective of that ABCD pattern from the high that we made, as you can see, that double top that was up there at 1377. And remember that double top, 1377, was some major stuff on the long-term weekly. It was a 61% retracement from 2014, and it was also a 38% retracement from 2011. At that area. So this could be, something significant in gold, but neither here nor there. You have to buy the patterns as you see them, and there's certainly a really nice one at 1,300 in the gold. It might not work, but it's got all the things that you could possibly ask for. The ABCD pattern, and as you can see, there's been 2 of those over the past month. Each one of them have yielded a huge amount of money. So it's the ones that don't work that you have to worry about. So don't risk any. The maximum to risk on this would be $10 an ounce. That's what I would give it as a maximum, of watching it. Now the market has opened higher as we expected. Let's just double check our master, Tom O'Brien, to see how closely we get to this number, 10,819. Wow, this thing has not even done it. Oh, it haven't got the first ticks out yet. Just a second here. Wow, it hasn't even taken out yesterday's high yet in the, yeah, it just did by about, wow, it only took out the New York Stock Exchange Index high by 3 points. Give me a break. Wow, you have to watch this, because in the first half hour, if this thing does not keep going, this is not going to be good, because you couldn't break out above it given all this bullish enthusiasm that we have going through here. So let's see what happens with it for the rest of the day, and then we'll take a look at it. Under any circumstances, should we get below 2038, Larry, get the numbers right. Get the numbers right. Should we get below 2138 in the S&P futures, that would signal that we've had some type of a key reversal occurring here, and then it could have to go to the downside. But that's the only thing. I mean, I don't see anything else that you can hang your hat on, at least from any other structure. But the fact that the New York Stock Exchange Index could not do very much today is really quite. Here we go. Now we're starting to move a little bit. We've gotten up. There we go. It's starting to get. It's got to 10,806. So it's updating here. So remember the number. We're going to look at this tomorrow for sure. But it's 10,819. Right now we're at 10,807. So at 10,819, we're going to put our good friend and leader Tom O'Brien's foot to the fire and see how he came up with that number of 10,819. That's a 1.27 expansion number from June 6th down into July from June 6th down into June 27th at 1.27 expansion comes in at 108.19. That's, you're talking a difference here between the fib number of the 786 and where we are now. That's less than 1%. And a lot of these markets, as we know, bottom on some of these, really emotional things. So we'll keep an eye on it. So anyway, we did hit a new high. So we're 10,810. We're almost there. So we'll see how the market ends up on the day, because we don't have a whole lot of time here to cover a few other things. I've had a couple questions. One of them was yesterday we had Mr. Z on from TFNN, who's in our room, one of the superior traders that are in the room there, and he was talking about the Amazon and the fact that this 10,000 the 758 level was very, very critical. We hit it 3 days in a row. Right now we're still up a little bit now. We're at 746 in Amazon, but it's still $10 below the 1.618 expansion that he was talking about yesterday. So if you had to pick a stock to be a seller of, you want to sell one of the weaker ones, and Amazon is certainly certainly in that category. One second. Okay, nonstop talking. All right, there's where we go here. Okay, let's take a look here. Well, we did have a downtick now in the New York Stock Exchange Index, so someone was interested in selling something, so we'll have to wait and see. Okay, one other question that someone's asked me about is the Bradley model. Folks, the Bradley model is wrong. I mean, it's 5 days past where it should be, and it doesn't have that big of a swing. The only thing that would be causing this would be something that I don't see, and it's certainly apparent that I don't see it, because it's just gone up a lot higher than I thought it would, which that's pretty much how it does it sometimes. But this is not the time to be buying stocks after an 8-day run like this. And frankly, we've been straight up since Brexit, other than the 1.5 day correction that we had back on July 3rd, into the 3rd and 4th before we took off to the upside. So watch today's close. If we close lower today after that being up 200 points overnight, then that would be a key reversal type day. And then you'd be watching for the first ABCD correction on the counter trend. In other words, let the high be made, get the ABCD correction to come in, and bada bing, bada boom. And then you'd be able to, be looking at what you want to see as far as the main thing that you want to watch. So far, our high in that index for the NYSE is 10,810. Tom was looking for 10,819. That's pretty close for government work, folks. So keep an eye on these things, because if they fail, you'd have a key reversal. But you don't want to be buying today. This is don't get involved with this emotionalism. Occasionally they're going to run, but with these patterns the way they are, this is not a runaway situation. Even with the NASDAQ, it is still not showing anything near the strength that it had before. So just keep your powder dry. There's going to be other things. You have great moves in currencies. We're going to have great moves in gold and the grains. We've had some tremendous moves in grains, and these are weather markets. So we know when weather markets react, they go both ways, both up and down. And that's, pretty much what you're looking at. Now with the NASDAQ, we were able to take out the high from April 19th, and we took it out by a whopping 1.5 points. In other words, we went 1.5 NASDAQ points higher than we did on April the 19th, and that's all it's done. So I would, just don't buy it today. Let's wait and see how 10,819 holds up in this NYSE. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart for the 30-year Treasury bond. As you can see, the ABCD structure that we have here. We're trading at the 78% retracement at the 172.20. The low has been 172.18. This tells us that we're most probably looking at that 171 handle. And if you, this happens to be a shorter term chart, but if you were to look at this on a daily chart, you would be interested to see that it would be down 6 handles from the high, which would be similar to what we did on the last correction that we had in bonds, which was a little over 6 weeks ago. So 171 is the number to watch. Anything below 171 and this market's going to be finished for quite some time. Now, we will have Bill Meridian on from Vienna, Austria, either Friday, Monday, or Tuesday. I'm trying to work that out right now. So we'll either have Rich Anderson on tomorrow, and then Bill will be on either Monday or Tuesday. Either day, either way, we will have those gentlemen on in the next 3 days as our guest. They have some really great information, to share with us. So we'll see what's going on. I did speak to Rich Anderson yesterday, and he believes if cattle go below the 108 level now, after rallying 3 cents off that spot, they could go all the way down to par, $1, which they haven't been there in a very, very long time. So that's also a possibility. That's why you want to know when these things fail. You don't want to stand in front of it, because it could be like a freight train on a supersonic track, and you don't want to have anything to do with that. So always use a stop. Try to protect yourself. If you don't use a stop, you are telling the market that you know more than the market does, and nobody knows more than the market does. Only God, and she doesn't trade. So pay attention to your equity. Make sure you protect yourself, and you'll be far better off. Next week, we're going to talk about some of the mental things that I received from my good friend Mark Douglas over the years, and I think you'll get some enjoyment on little simple tricks that you can use to reduce your risk. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.